Hello traders, good morning, happy Wednesday, happy 1st of May to everyone. Labor Day, holiday day in several countries around the world. Please give me some okay that you can hear me and that you can see my screen. It's also a great day for the football fans. Champions League, Barcelona, Liverpool, amazing match is ahead of us today. Will be very interesting to watch. All right, so let's begin, guys. As per Forex, this is a Federal Reserve rate decision day, which means expect the unexpected, right? That's pretty much the bottom line with such day, and the importance of it is: will the Fed continue with its weak line they presented recently by saying no more hikes this year, probably one hike next year? Or will the good data and the amazing GDP, for example, and other numbers coming from the US economy would make the Fed not to stick to Trump's wishes, but to the Fed's wishes, which was, before Trump complained, which was to go and hike. The economy is healthy for several hikes. Okay, so it will be that's pretty much the importance of it, to see what line the Fed will design after the recent numbers. On the last several weeks, numbers been changed, right? And the Fed might go and act accordingly. So let's start. We have several updates from the previous report that we designed on Monday. Yeah. I remind you, on Monday I didn't have a live session, so it was a full video preparing the trading week. So let's go over the opportunities we have been facing. One of them is the one that I have open right here on the chart, is the euro versus the Kiwi. Our goal was to look for buys with this bullish hidden divergence, or ideally after two waves. Okay, and I say ideally because, again, that would be an ideal setup, but Mr. Market, not always Mr. Ideal. Now, because we are with a bullish cycle, and as I always say, when we are in market conditions, which means timeframes are lined up, then we can go and play more aggressive, right? And this is pretty much what happens right now. The pair created this bullish hidden divergence and confirmed it on the low time frame here with this regular divergence and the breakout, made the breakout, and since then that never looks back. So this bullish run continues. What might happen here, again, unless there will be any changes, we are developing right now second leg from the daily chart. If that is the case, that means this will have to go and develop as a leg by itself on the 4-hour chart until this would become a divergence. The critical levels we can see here are again close to 170, maybe slightly higher. Now, as for now, the 4-hour does not, on this running leg, does not have a cycle. It's a first leg, right? So this definitely could be the next further development. All would remain relevant for this idea as long as the last low holds for invalidation. So the pressure was and remains for the Euro Kiwi to the upside. This is the first one which wanted to update. The next one also belongs to the euros. Euro dollar, the idea was looking for the sells with this bearish hidden divergence, this or this. So we wanted to go into 1-hour chart and confirm a divergence. And the 1-hour chart divergence comes right here, right now. It was trying to make some kind of a double top here, but never broke this low. then invalidated this high, but the divergence is still there. So the thing here is we still expect a possible reversal to the downside. Likely it will be short term, and the reason for that to be a possible short term is because for our chart possibly creating here some kind of triple higher highs, triple higher lows that might, and it's very early to judge, because again after the Fed speech today everything could change accordingly, but that might be the beginning of the bigger reversal with the same weekly reversal zone we were talking about, 111, 110. Will that be? Again, at this stage, impossible to know, because we do not have higher highs as convergence. We do not have yet the 3 higher highs and corrective cycle like 2 waves and breakout. So it's all under the assumption. If that turns a reality, we know we are changing bullish. If that not, the pressure as for now is still bearish. How do we treat this opportunity? The ideal scenario is to go and make a trend line, but it would not be correct because that's not really an official low. It's stuck inside 2 candles, no real 2 waves down, very tricky. So it feels like forcing and bending some of the rules in order to fit our wish. That's not good to do. So the right thing here is to go below the last official low, which is at this stage is right here. If we manage to reverse below this low, this should become as a good sell opportunity. How will that develop as a short term or long term? It's impossible to know at this stage, just because of what I showed before. It might easily turn to be the reversal that will present this kind of opportunity. So how will that exactly develop? It's impossible to know at that moment, and that's the reason why we treat it as a short term. It might go and develop for longer one, but it begins as a short term. Okay, so that's what we have here. This is the low. Break below that should give the okay to start looking for possible sell setups. All right, so this is for the euro. The next one from the euros is the euro versus the Aussie, which fills in the scenario of double wave correction. Right, remind you, after this daily divergence, we accepted here a move in 2 waves or a range. On the short term, for long term, our goal was and would remain looking for the sells. Now we pay attention to the top of the range, which might be reached. We pay attention to the possible bearish hidden divergence, which might be triggered. And if this is a bearish hidden divergence, 4 hour must be cycle. And this is what 4 hour currently makes for us. 2 waves cycle here. Let's just put the lines correctly. Here we go. So this is the first critical level with a developing. And I say developing because we never know when exactly it will tick and will it tick. But this is a developing divergence that might go and respect the 61.8, and then the bearish hidden divergence would become relevant, or come closer to the 100, and that it would be the top of the daily range. From there, we are looking for reversals. What kind of reversals? We can go to lower time frame and start looking for false breakouts, for example, and lower lows, right? Or lower highs, lower lows, and then sell the rallies. That's the things to wait for and to work with on such scenarios. Once again, we have the 61.8 critical here. We have the 100, which is slightly higher on the top of this range. Reached, looking for reversals. Why? Because according to the weekly, we are still after long-term sells here. Okay, This is for the Euro Aussie. Now, I showed before on the Telegram channel. Now, this was the setup during the evening, which was giving the two waves and the breakout with the SPT. I personally don't love such setups because of pretty heavy protection here. And the fact that the 4 hour is a limited move to the 61.8 cycle, which I just showed. Now, if anyone of you did take that based on the SPT strategy, once again, I want to remind you, for all those who see it for the first time, this strategy is available for you inside the members area. Totally free for all TAC members. Now, this would be a good place to make the cash out, again, because of the reasons just mentioned, or at least move break even. We never want to let a winner turn a loser. Bree, you say you tried it for the first time, the Euro Aussie? Okay, so my view here is, again, I don't like that because of the stop loss. It's pretty big. Technically, it's correct because everything there is lined up. I don't have it here. Okay, I'll show it this way on this template here. That's from the scanner. So technically, it's all correct, but keep in mind what we just discussed of the levels. Okay, levels, divergences. That's pretty much what you need to know right now. Okay. So that's about the Euro versus the Aussie. Next one. Okay, next one is the Euro franc. Let's take a look on this one. First of all, the general analysis and what are our directions. So we are after long-term buys. We got this buy with the bullish hidden divergence. We got the push. This push stopped by a bearish hidden divergence. That means we are still into the possibility of a corrective cycle. Corrective cycle of what? We always have to ask ourselves. And this was the analysis we had. A special cycle with the bearish divergence, meaning we do expect a corrective cycle. Corrective cycle could be in two legs. Corrective cycle could be a range. Range means two false break, one on the top, one on the bottom. That makes this as a possible range. Does that matter? Is it matter? That it will be two waves or a range here? No, not at all. If it's a range, can it keep moving inside and do something like that? The answer is yes. These rallies could technically start any moment if it is inside the range, as long as it is below the 50% of it, and it is. Okay, that's pretty much the idea of range trading. Now, do we really have any setup coming from the 4 hour chart here, technically, with divergences or cycles? No. Do we have any setup coming from the 1 hour chart with divergences? Well, yes. This. Triple and then double. Now, we don't have two candles rule here, but we do have the alternative, which is two waves. And that makes it two-wave correction. So theoretically, break above this trend line should be the one that will lead for the next buys. Now there is one also view here on the Euro franc. Take a look here. This comes from the scanner, all still bullish. It's currently gray, but if the scanner of the trend becomes green for us, this might turn to be a nice, interesting buy opportunity. Again, one option is the trend line, the ABCD pattern. Second option is the last two candles. We don't know yet which would be the two candles, right? But the second strategy for entry here is the last two candles in the move down to be broken. Currently, that's the last two candles. But again, don't forget, this has to become green. As for now, it's gray. So this is a hot watch list for the Euro franc. And the most important thing is, if we break through and stay below, remember, we are going for the second leg of the 4 hour, which is this. Once completed, and how do we know it's completed? This would have to become a cycle by itself and develop bullish divergence. Once I did it, we are switching again for buys. This is the full plan for the euro franc. Okay, any questions so far? Now, the previous entry we had for the euro franc was, well, first of all, possibly the two waves here, and the last two candles on this move down. This was the last move down. The last two candles here were this. Now we got here the move we wanted, the 1 to 2. So basically at that moment, and when this became a bearish hidden divergence from the 4-hour chart, game over. Money in the pocket. Always remember that. Always remember that. Stay updated to what the market gives you. The market shows signs against, money in the pocket. Remember, trading is all about making money. We don't care about being right. We don't care about the lines. We care about making money. That's trading for us, for all the traders, not just for us. Okay? And I want you to remember that, because it's too easy to fall in love with the idea and expect to ride huge, massive trends. Not always they will be available, especially not in a waiting period before the FOMC, the Federal Reserve. All right? Euro pound, it's on the list. We will reach that. We will reach that. A bit patience, please. Okay. Okay, so next one. Let me check if I covered all the euros. Yes, that's for the euros, for the technical setups. Now the euro pound related, euro and pound related. So we are bearish so far, holding the top of the range. The whole idea for us is sells. Now it went aggressive with this convergence. Now we are also coming to the critical place. You can see here, right, to the trend line, the 4-hour chart cycle inside the daily range, and its trend line. Break below that, and we have trio. That's a good sign for long-term continuation. Will that break or not? Of course, we don't know, but this is the idea we are following. Now, the euro pound, as per the SPT, has a beautiful lined up for 4-hour and daily. Never gave a real setup here for two waves, right? It did give the last two candles in a rally, but again, it's too far. Stop loss too far. No go. Not good. So if that comes closer, this would be a possible good setup for us to follow and to trade. Have that on your watch list. It's far away for now. Most likely it would be by tomorrow, the way it develops. But of course, we never know. Have that on your watch list, guys. It might turn to be a nice opportunity. And for main longer view, remember, it has to break the trend line. Break below would provide us the trio and the possible beginning of the next leg of the long-term sell. Have that on your watch list. Next are coming from the pounds. So what do we have? We were talking about two pounds, pound franc and pound dollar. Our idea was looking for our buys as long as the low holds, and if the low doesn't hold, waiting for the two waves and then looking for the next buys. We got a setup with the SPT that was a couple of days ago. That was the place. No more, nothing to say here, to be honest, because it's done, paid, and game over. And as for now, nothing new is developing for pound franc. So that's pretty much it. The only thing I would do, if you still did not cash out partial or did not protect yourself with any way, like move stop loss to break even or trail your stop losses or anything like that, what we call management, it's a good time to do, because you have two time frames here possibly showing slowdown for you. This is the daily, and this is, well, the 4-hour doesn't really have it right now. It's gone. Let me check. No, it's still there. There is divergence here on the two waves. So 2 time frames against, definitely cash out. And there is nothing else to say here about the pound franc as for now. Why only partial and not fully? Because the long-term cycles are bullish. It could continue and fly. That's why you never want, when the bigger cycles are bullish, you never want full cash out. Why? Because the fly could happen any moment despite any short-term signs against. That's why when the long-term cycles are there for you, you always want to give yourself a chance, at least for a part. Okay, so that's for the pound franc. The SPT worked, the cycles hold, nothing new to say. Thus important to apply management. Management in that case is anything like protect the break even, cash out partial and break even, or trail stop losses, or anything else you apply. But it's important. Why it's important? Because when the market shows signs against you, especially on 2 time frames, it's pretty silly not to listen. Market always know better. Always. Next one on the list was the pound versus the dollar. And we were looking for 2 buy zones. One of them was the 129 area. The other one was closer to 128, 127. If we get a clearance here. So what happened here, the 129 did hold. We do have the trendline breakout of this, where is that? Here, the daily trendline breakout. Beautiful turnaround with bullish candles, several in a row, growing momentum. And the 4-hour chart tries to build up here some kind of triple high, possibly reversing it for the longer term buys. So for the short view, I think this level becomes critical. We have several zones here which would be used for stop loss for all those who will try sell. I don't know why, but there are enough traders trying to sell in such rallies. And also pay attention to this. Could easily turn to be something like that, of course. So what we want for the next portion of buys, if you are not involved yet with the trendline breakouts, then to improve the risk reward, 2 waves retrace, breakout, or bullish hidden divergence. And then you have a full lineup. Weekly, daily, and 4-hour will be together bullish. Triple time frame to the upside, that's a buy. So 2 waves or bullish hidden divergence. Of course, it can go and make some kind of a range here. Always a possibility. I don't think, because the wave looks too impulsive here, too straight, beautiful build up. So I doubtful it would be kind of a range in that scenario, but of course, we never know. So pound dollar was and remains bullish for us. And now it became official with the break of this trend line. This becomes as invalidation area. The idea is this. Okay. Let's go here. All right, that's from the pounds. Now, dollar franc. This buy entry that we were following failed. The breakout here was too fake, too small, and of course it invalidated everything here. So this is a loss. The breakout, this one lost. Does that change the view for the dollar franc? No, it's not, because the 103, 104 is still critical area. There is no sign for reversal like false break, lower lows, or 3 lower highs, 3 lower lows. No signs against. Therefore, the expectations are still bullish for reversal and go to 103, 104. Do we have any new setup coming right now? not really, not yet. That could turn to be like a bullish hidden divergence, of course, but for that to happen, 1 hour chart would have to turn to be divergence by itself, and it's not. So dollar franc isn't ready for anything at that moment. I still remain in bullish view, but it has nothing. Now we also check here for the SPT. You can see it's all gray anyway. So as per the SPT, we never got here a trend line breakout confirmation. All is green, gray, sorry. It was pure technical view with the trend line breakout with just cycles, trend line cycles, and it failed. The SPT, neutral, no entry. And right now we are below, so anyway, nothing to follow for the dollar franc. Okay, that's the update. Yet for the pound dollar. For pound dollar, let's take a look. What do you ask here? Pound dollar scanner is still gray on the 4 hour. This one. Well, yes, of course. If the pound dollar follows the scenario we just covered, this possibility or making a bigger wave, and that gives it two waves, of course, then it will start to line up. Yes, that's the whole idea. And if you that's if you work with SPT. If you aren't, then this was the only thing here that basically validated the longer term view. It makes a triple double, and that's pretty much it. That's what validates the buys. Okay, if you are for long term, you have the okay. If you are for short term improving risk rewards, then it has to be done correctly, and that's why I showed the retrace. It has to be two waves, bullish hidden divergence, or possibly a range. Okay, all right, moving on. So dollar franc we covered. The next one, and so dollar franc is neutral basically, waiting for a setup, and then showing the buys. Next one, dollar yen. Now dollar yen, our view was bearish, expecting the second leg down. Let's take a look here. Dollar yen. Here we go. Expecting the second leg down. This was our plan. So here we are. What's next? You know my view. Still remains bearish as long as there are no reversal signs. What do we have to pay attention to for the possible divergence to tick after the Fed? This is a critical trend line, and that could be the one that will trigger this triple double. Will that? We don't know. Sorry, I drew it badly. We don't know. This is the divergence place, right? But as for now, the fact is it's all bearish. Last divergence from the daily, bearish. Last divergence from the weekly, developing bearish, hidden. Last divergence from the 4 hour was bearish. So will that change the bearish view or not? We don't want to guess. That's why we remain bearish as long as the trend really holds. SPT was the one that provided here this opportunity for the sell. Also, basically coming from two time frame lined up, short term, daily 4 hour, came back to the cloud. Last two candles in a row because we didn't have two waves here. So the thing we did have here was last two candles, and that was here. So this breakout happened. So far goes around 1-to-1 risk reward. Remember, never let a winner turn to be a loser for whatever the sudden outcome could be with the news or without the news. You don't want to be exposed to random moves. The market allowed you to enjoy movement and a profit. Never let that turn to be a loser. Okay, so one of these approaches is, of course, break even, and whatever happens, you are risk-free. The second is trailing. The other one is partial and break even, or any other combo you can think of. So dollar yen. going good for us. And of course, if it breaks the trend line, invalidates the bearish view for as much time as needed until it becomes bearish again. Okay, I want to answer a few questions. Bree, do you look first in the 1 hour chart on the SPT? How far away it could? No, I first of all, always, it doesn't matter what strategy you trade with, completely doesn't matter. The entry, it's every trader and his or her own comfort. That's why the strategy itself doesn't matter. What is most important is to choose the direction, because if you don't choose direction which you want to trade, basically you would find yourself hitting everything: buy, sell, sell, buy, sell, buy, sell, on any different combo. Daily 4 hour, 1 hour could tell you one thing, 4 hour, 1 hour, 15 minutes could tell you different thing, weekly daily 4 hour could tell you something totally different. You would find yourself always changing, always hitting, always hoping. So the most important thing is to get the analysis, the chosen direction, and then you trade according to your preferences, comfort, and availability. If you are able to trade the combo of daily 4 hour and 1 hour entries, good. Just remember, the management has to be accordingly. If you aren't, then weekly, daily, and 4 hour are the right thing to do. Then you have much more time to adjust, to prepare, and easier follow-up. Okay, so basically, it's very, very important with what the trader feels the comfort with. Okay, my goal, as always, we first of all prepare the general analysis, and I do that based on the techniques of cycles, divergences, convergences, combos, choosing the direction, defining what's short-term, defining what's long-term, and according to that, looking for the positions. Okay, and the setups, that's what we explain here. 2 waves, hidden divergence, SPT now involved, all that is the full preparation. Okay, Michael, how do you pop out the window containing SPT direction for week? What do you mean? How do you pop up the window? You mean this one? Ah, this one here? No, you can't. I did it on you can't. That's the programmers built for my comfort when I was basically working with the beta team on backtesting everything and testing for reliability, performance, and so on. So you can't. It's not a version of shell. I said it on the manual, by the way. Don't ask this this question. It was for the purpose of tests and basically for the live room, so we don't switch every single time here, right? So it's all in one window. Okay, so that's for the dollar yen. Next one, Australians. Aussie Kiwi. Let's start with this one. Making the bullish hidden divergence we were waiting for. Might be engulfing by the end of the day. 4 hour confirms a bullish regular divergence. So let's see, is that enough for a hold, or will we have one more spike? Everything is possible and acceptable in that case, because the daily is developing a bearish, bullish hidden divergence. Sorry. So we are after buys. Okay. So basically it's ready. That's what I'm trying to say here. If the end of the day becomes bullish, it's good for us to start looking for the buy setups. All right, that's pretty much it. We don't have a clear 4 hour chart trend line, so it could be with the improvements on the 1 hour chart to waves and breakout, or bullish hidden divergence, or step trading. Right, any option here would be acceptable. So that's for the Aussie Kiwi. Next one is Aussie dollar. Now Aussie dollar, our view was and remains short-term bearish, long-term bullish, which means for short-term we expect these bearish hidden divergence take place and make the pressure to the downside. Now there is one thing I dislike Look what happens here on the Aussie dollar. It is stuck inside 2 candles range for too long. These 2 candles, see that? So yes, the pressure is definitely bearish. Break below that could make the movement, of course, but it's suspicious. And take a look what happens on the SPT. It also started beautifully. Last 2 candles to the upside were broken right here. This low and this, right? These 2 candles broken. And since then, back and forth, changing gray, red, stuck inside this range. Like these conditions. Also, the swing points changed. Game over for the Aussie dollar in all terms of SPT. And for the general view, it has to get out of this 2 candles row. It has to get out. Then we can talk about new sell setups. If it doesn't, then this is what we expect and anticipate. New high for divergence. So basically 2 waves retrace before one more low created. Why it is still under bearish pressure for the short term? For one reason. We do not have any reversal signs yet. No false breaks, higher highs, and no 3 higher highs, 3 higher lows yet. Therefore, the pressure is still bearish. It doesn't look good at this stage. That means you don't have to trade if it doesn't look good and correct. Wait for it to clean the table. But the direction still remains bearish. And that's very, very important to understand when you choose your things you trade. Next. Silver. Oh, okay, silver. Very important. And then I go back to Forex. Silver went below 61.8 of the rally. Remind you, not as gold, silver never created higher highs. Going below 61.8 make it simply neutral and nothing to work with. For the long term, the idea is still bullish. What we're waiting for the next signs, next correct signs. As for now, gone. Silver out of the list, becomes neutral. Okay, didn't provide any good entries. That was the attempt to make some 2 waves here. Never got a breakout. Went below 61.8. Gone, game over. Next. Where we are. Okay, last 2 Forex pairs on the list. Kiwi CAD and CAD franc. So Kiwi CAD, here we are. What we're looking for with the daily divergence? Sell the rallies with corrective cycles. Corrective cycle could be 2 waves or a range. We didn't have any yet. Well, this was a possible range that we were following, right? But it had to make a cycle inside it. So Kiwi CAD never provided anything interesting in terms of cycles, and it doesn't do that as for now as well. So game over in terms of cycles. But the direction is still bearish, and look what it does for possibly provide us with SPT. And that's why it's a follow-up. 3-0. So that could be a good 2 waves thing here with a trend line. The only disadvantage we have here is this 1 candle. We're stuck inside it. I like it much less, but at the same time can't really deny all the bearish pressure. Therefore, it's a very possible setup. Of course, it will be more aggressive. This 1 candle hold, it's suspicious. Aggressive means small risk, smaller risks if taken. That's the definition of aggressive, because not all the conditions lined up for you perfectly. Okay, it looks good. All good looks prepared. Of course, we have to make sure we have the lined up of the cloud, the scanner of the trend, and the swing points. Okay, this is for the Kiwi CAD. And the last one, CAD franc. CAD franc, also reminding you we are in corrective cycle. Corrective cycle could be 2 waves or hold a range. Both scenarios are still totally acceptable. That's pretty much like the Euro franc, 1-to-1. So what do we have here? We don't really have any new setup as per cycles, because we never got 2 waves and we never hold a range yet. So we were trading this only short term. We're looking for trading short term. The CAD franc was here. Now that was the case at first. Then it went gray. When it goes gray, we are abandoning this. Went bullish again, looking for the traces and setups. And again, changing gray and not breaking last 2 candles. Last 2 candles are this. Now it's this. These two. Last 2 candles creating higher highs, lower highs, lower lows. We never got a breakout, and we are going below the cloud. So this pair is totally neutral. There is nothing to do with that. So waiting. Okay, so CAD franc becomes on a waiting zone, 2 waves, or a hold on the bottom of the range. If it's 2 waves, you do want to confirm this divergence. And the last one from our list, oil. We were after sell the rallies, right? Expecting 2 legs correction here. Nothing as per the technical. Well, there is a trend line breakout here, but I like it much less, I must admit, because of the candle structure. Much less, not a classical thing. Okay, so that's pretty much the only thing was available on the technical view as per cycles. Now an SPT, what we have is the switch, and from that moment we, as I said, this was the only 2 waves available, but not really cool, and it also was gray, so nothing to do here. So the only thing with the oil available currently is this rally, and the last 2 candles making higher highs, higher lows are this. Breaking below, expecting the momentum to continue down. As long as we are all lined up, of course. Very important to pay attention to the gray colors. Very important, especially if you are dealing with mixed things like this. Okay, this is totally gray and bullish, and only the 1 hour chart is bearish. You understand it's much more aggressive conditions, right? And if you work with much more aggressive conditions, you are definitely want to be more sensitive with your management. It's very important to understand that, once again, because as traders, we always are looking for the easy solution, set and forget, fall in love with the idea we can make big money, and so on and so on. But it's good when the market is lined up for you. It's not smart when the market isn't. And it is when everything lined up for you and ready to go in terms of the technical view, and it's not when you have mixed signs. Okay, so this is the update, guys. One more add on. It's not yet on the list, and I will not add it on the list, but pay attention to the DAX. It's coming beautifully to the area of a clearance right here and the 161.8 expansion. The slowdown as divergence, we can see that, and the 4 hour starts to show the divergence we'll have on the moving average, starts to slow down with some fake breakout. So that could be an ideal scenario, like a little push, clearing, making the lower lows, and switching bearish. As I said, it's not going to be on the report as for now, because it never really confirmed a reversal yet, but definitely a one to follow, which could turn to be interesting for tomorrow or further. So what do we have once again, guys? Update. Dollar franc was the only one that disappointed. The rest, euro franc, pound franc. What else do we have here? Dollar yen, and the rest things that we discussed, going pretty beautifully. Pay attention to the FOMC today and the Federal Reserve decisions with the rates. Okay, wait for your setups and pay attention to the little psychological things I always keep repeating. It's important. Trading is not only, is it red, is it green, can we sell, can we buy? Trading is much more than that, and it starts with the psychological thing, guys. If you can't deal with the psychology, it doesn't matter how good you analyze the market. So put your focus on these right things and practice them as hard as required. Listen to the market. It tells you the whole story, not the indicators, not the systems, not the strategies. They just give you opportunity to enter. The market is the one that tells you the story. Listen to it, to what it tells you. When the market conditions are conservative and the time frames are lined up for you, that's where you want to trade. That's the conservative setups, okay? If the market is more aggressive, you will want to be more conservative. Okay, so that's all for today, guys. Thank you very much for being here. I'll see you in the Telegram groups, and I wish you a wonderful day and wonderful trading. Thank you for being here. Bye for now.